I have found the absolute best news trading firm, guys. Perdia Capital is my go-to for news trading. I made just a little over $7,000 on FOMC, just this previous FOMC. So I want to talk about them, their payout schedule, why I think they're a good firm overall. And if you have a news trading based strategy, they're probably the firm for you. But in general, FOMC as an event very often trends. I'll have a lot of data in my journal on that. So I'm just going to use the last FOMC as an example to talk about the trading strategy, how you could have traded it regardless of whatever firm you use, and then also relate that back to Perdia, because again, they offer pretty good accounts with some high leverage where you can extract amount of value every single news cycle, and they explicitly allow news trading, which is key. This is key because other prop firms, all my favorites, don't allow news trading. Every prop firm can decide, ultimately how they want to create their accounts, what rules they want to have. It's up to us as traders to decide which ones we want to use. For anybody new here, my name is Forrest. I invest in stuff. I think that everybody should too. I am a day trader. I've been day trading for years now, millions of dollars in funded accounts, actual 7-figure gains in the real market in my personal account. Very first big win was in some SPACs, and then I made a ton of money, GameStop back in the day, and then a ton of other stuff. And I'm just still trading. I'm out here just trading and slinging money. And we've got a Discord where we trade every day, and you should go down and you should click the link in the Discord, and then you should join the Discord, and we'll teach you how to trade, and we'll all just keep trading together, and then we'll just do that, and then we'll just get right into the video. All right, here we go. Awesome. So there's a lot of stuff going on here. What we're going to do is we're going to look at NQ on FOMC, which was on Wednesday of this week. So before I jump into this, I actually want to talk about a quick concept in trading, which is you don't need to have, guys, the lighting here is so good. Like that. I just love cinematography and in general, but love this time of day. It's raining outside. Oh my God, I love it. But in any case, if you want to start filming, guys, quick setup. I know this is a little side, but I love this stuff. If you want to start doing content, maybe your own day trading channel, would love to see more people doing it. Sit by a window, middle of the day, as long as your video is not too long, your exposure won't change a ton, and you get really free, amazing lighting. Just sit, got the light coming at this angle, the camera's right there. Boom, it's easy. But let's talk about timing. So timing in the market, ego, and everything else. Something that happened in my community, okay, is people were trading right before FOMC at 2 p.m. trying to figure out what was going to happen. And it's fine to want to see what's going to happen. One of the pitfalls of trading in particular, for whatever reason, in this niche that we're all in, people get so tied to their bias or whatever they tweet out, post on Reddit or whatever. But what you think the market's going to do only matters if you have risk on. Like really, for your reputation, that might take a hit, and that's fine. As somebody who says things about what I think is going to happen, I feel this pressure immensely, all right? Especially every day when we're calling out trades and things like that. I feel an immense need to be right about everything that I say. But here's a fact. I can't be right about everything that I'm going to say. Sometimes when I say it's going to go up, I'm going to be wrong. And that's going to happen a lot. So the mark of a good trader is being able to update our thesis, provide context, have multiple theses. So you'll see me talk about, all right, here's my upside thesis and my downside thesis. And then I'll say I'm more biased to the upside. But if we do go down, it would make sense for them to seek out this liquidity target. And here's how it would get there. If it goes up, here's how it would get there. So that, I think, that type of thinking is the mark of a good trader, because you recognize that you can't be right all of the time. If you fall into that game, especially online, is that you will end up trapping yourself into getting into trades, waiting for it to go your way. And that's not what we want to do as traders, right? We want to listen to what the market is telling us, listen to what the auction in particular is telling us. They're building volume shelves in certain areas and things like that. The volume profile is moving higher versus it's moving lower in the session. We want to listen to what the market is telling us and act accordingly, all right? So do not get too tied to these theses. If you know that there's news at 2 o'clock and the event's coming at 2 o'clock, then why are you burning capital at noon when there's a 7-point range? Don't do that, guys. It really frustrates me. And I kind of called out everybody on my Discord who was doing that. It's just bad to do. So I still have my TA marked up from this session. Let's talk about what we have on the chart here. Let's get rid of this. That's fine. So something that's going to be critical here is this POC for March 12th. So this March 12th POC is where this first impulse came up to on the 5-minute. See it right here. Big old top wick. We'll just keep zooming in a little bit. We'll get rid of this alert here. We don't need it. So we came right up to that POC, and there was also confluence there with Camarillo pivots. We're not going to talk about cam pivots here in this video, but there was confluence there. And in general, seek confluence in your trades. So let's talk about the session overall and just FOMC. So the market overnight, sold off a little bit, came lower. We kind of did this rounding pattern, little rounding pattern. We know FOMC was going to come. So in the morning, we have this 5 a.m. pivot, comes up, and then it sells off at the open. Okay, so it retests this high, sells off, boom, and then we're in chop city. So unless you got anything from here to here or from this impulse down on this retest, you should have been sitting tight, right? So by really 9:30 a.m., you should be doing nothing really. FOMC, you should be doing nothing. And that setup, by the way, is going to happen over and over and over and over and over again. But that setup's going to happen over and over and over again. So that setup where we have a swing high, we retest it. Okay, this happens all the time on data days. Okay, and then consolidation. So the actual session before data was very flat. So what do? Well, we just wait. We start looking for areas where there's going to be confluence. And so what I did was I went to the higher time frames. Let's go to the 4 hour. 4 hour, we'll go back a little bit. So let's turn off. So here's that marker from the shorter time frame. And let's go ahead and go to bar replay. So I'm coming into this session and I'm looking here at this point in time. I'm on the 4 hour chart on NQ. I plan to trade NQ with my Perdia account. I want to do a 5 NQ trade and I want to get like 60, 70, maybe 100 points. So I'm looking, what's a reasonable target, right? We'll get rid of all of this. We know that that POC is there, but let's just get back to what it might have looked like at that time. And really, this is what it looked like when I was on Discord talking about it. There is this POC up here naked. It's not really a naked POC, right? We came through it. There's a little bit of imbalance there. It got retested, but we haven't tested it recently, right? So if we swept up here, I'm looking for what is a good liquidity target on the upside. There's a little bit of confluence here. So one, there's a local high right here on the 4 hour. This high, this value area high, and this POC are all very, very close together. It's going to take some experience, but I'm looking for what's a price that they could sweep where there's confluence for rejection. Okay, I'm looking for as much confluence as possible. That's it. What does confluence mean? That means I'm just looking for things to line up. This line and this line happen to be the same line. Oh, there's another line that's the same line. Confluence. The more lines that are lined up, the better the trade. That's literally how simple I keep it, guys. And there's a lot of stuff out there that's going to overcomplicate it, but it really is that simple. I'm telling you, it's that simple. So I see this immediately. I literally see this line and a sweep of this price. So I go to my chart and I mark, okay, 312 POC is a short. And that's the trade I take. So I wait. I don't take a trade coming out of the gate right at 2 o'clock, right? I actually sit tight. On the downside, I'm looking for the same thing. I'm like, okay, I know that especially on these days, the market can do more than you expect. I'm seeing, okay, there's a sweep here. There's a POC down here. These are pretty close together. So I would look for a long around this price, 18,072. You can see that these are pretty close together. I also have a macro pivot already on my chart down here at 17,967 or 17,966 really, which is, any previous pivot is also going to be a target. And then there's this macro trend line down here, which is also a target if we really, really sell off. If you come all the way down there, it's 390 points, pretty exceptional. But if you come down to here, it's only 189 points, 300 points. So this is 290 points. That's definitely doable. Okay, it's definitely doable on a sizable day. And then up here, this is really only 130 points. That's 100% doable. Like that's easily doable. Also, there's a fat top wick right here, fat top wick on the 4 hour that closed. So I'm thinking with a high volume top wick, I should be looking for some type of rejection, right? So initially coming in, I had a little bit of downside bias, which I eventually changed after we saw the pullback. We failed to come back to the opening price, but we'll walk through that in a second. So what happens here? We go to the lowers, go back to the 5 on this time frame. Get here, it's 9, 10. This is that chop zone. So here's that target I had called out. So we get a candle here. Next candle is where it went up. So I had a resting limit sell up here. And you can see on this first impulse, that's 85 points in a 5-minute candle. My trade was done. So in the opening of this video, I talked about making $7,000. That's $7,000 I made in one trade just like that, guys. That was the trade. That was it. And if we pause and think about why news trading as a strategy can be so good or so useful is I could do this once a month. Let's say I average $7,000 once a month times 12. What's 7 times 12 is $84,000 a year. Just doing that one trade. Obviously, it's not $1 million Lambo money, but it's good money. You could do it. And that's just with 5 NQ. I could have scaled up. I plan to scale up more with this. as I trade more of these news events, but that was just one firm. I also was trading all my other firms. I was trading Apex at the time, my money funded futures. A lot of stuff going on, right? Trade copying and all of that. But just with Perdia, I made $7,000 in just a few minutes on one trade. The other thing that I want to highlight here is that I was in New York City. I landed at noon. So right around this time, I landed. So I glanced at the market. All this analysis that I just did, I did in like under the hour. I got from the airport, had to get my luggage, got home, walked in, checked the charts. So like FOMC is at 2. I saw people who were talking about trading with this small range. I was like, guys, what are you doing? That makes no sense. Stop. And all these people who were getting chopped up since the morning, I literally just said, I'm going to do a limit sell right here. Made $7,000. Easy money. We want to be smart, easy traders. Please, for the love of God, stop trying to figure out how to make money here. A lot of you guys are like, oh, we gotta catch this pivot. Then I 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 gotta catch this pivot. It's like, why not just catch this pivot and be done with it? I didn't mean to rhyme there, but I did. But in any case, there was that sell there. So let's talk about where my thesis failed. So I took the short. That's awesome. On day-to-days, I always look for a return to that opening candle. So we can see that we opened here at 18,272. So this is that open of data candle on the 5-minute. So if this is going to fully range, okay, there's a narrative that I've seen on data days. If this is going to fully range, this should come back to this price, and then it'll actually come through it, and we'll probably get an equal leg on the other side. So that's what I'm looking for. So let's see if we get back to that price. Comes down. Okay, it's looking good. It's looking good. We chop a little bit. It bounces off of the VAH, comes down. Okay, what do we get? It rejected. So I pressed the right arrow too many times here, but we can see that we bounced here. So I ended up taking profits right around down here somewhere. I can't remember the exact price. Maybe it was like up here a little bit. So I take my profits. There is, and I'm summarizing, guys, this ended up being 2 trades, okay? So I took this short, actually did take a long. I caught a long the last third of this leg here. So long from here to here. I took a short from here down to on that first impulse, and then I reshorted and then took profits down here. Summarizing it, but I'm explaining more of my thought process, which is more important than the 3 distinct trades that I took here. But what's really important here is my initial thesis and how it failed and how I changed my mind. Okay, that's key here. It's key here to the point that I said earlier. So the whole point that I took the 2 shorts is because I was certain that it was going to come here. It did not. It bounced with volume away from that price right off of a cam level. I know I don't have it marked here, but there's confluence on my ninja chart. There's also this local high that we bounced off of. So at this point, given this chop, I'm thinking, has there ever been a day-to-day where we did this weird thing, bounced, and then we came back through? No, there hasn't. So I immediately switched bias, and I'm looking for longs because I do know that FOMC trends. It took me a while now. I explained that in one sentence. It took me a while to fully switch to long mode, but what I did do immediately is I took all my risk off. So I closed here. I didn't reshort. I'm like, or wait, I'm up a lot on all my accounts. I'm very, very green. So what I'm trying to figure out is, okay, this is where ego comes into play and it plagues everybody. I wanted it to come here because I wanted to be right. I'm already green, but despite being very, very green, I still wanted to be right, which is a disgusting problem to have. We bounce here. So what I decided to do is I recognize this internal turmoil and I'm just flat. I'm just flat on the day. We break higher, there's some pullback. And I'm like, okay, now this is looking like trending price action. So eventually I just take a long and I hold. But I do that way later in the day. But I take a long, I hold, and I make a little bit more money. And now we're in the overnight price action. But I think I took a long probably an hour later. So FOMC was at 2. That's what, 3:30. Another hour or so after we broke this high. The point is, I recognized the internal conflict and went flat instead of trying to prove something. All of this while being already green. I want to call this out, guys, because this is the part of trading I think is the most important. I saw a video recently on YouTube. Somebody was like, trading is not about psychology. It's about something else. Trading is all psychology. Okay. Learning how to do this stuff is pretty easy. I'm already green, big green, but still felt that need to be right. That's a challenge for us as traders. Okay. So if you want to get these payouts with Perdia, and we can go and look at their plans right now, one of the only ways that you're going to be able to unlock these 25K a week weekly payouts is if you manage your emotions. Okay, they have really good evaluations for beginners, some of the best tools in the game, NinjaTrader, TradingView. It's super easy to get started. The only reason I kept those $7,000 that I made is because I didn't chase, right? I didn't try to prove myself to get that last part of that trade. So the only way that you're going to be able to extract, all the value from your news days is if you just have that ability to switch bias quickly. I do want to call out some of their payment rules. Funded traders must trade for a minimum of 10 days in a funded account in order to request their first payout. After that, traders may request one payout per week. So this is really good. There's no scaling rules. There's no 30% or 40% rules, right? There's no consistency rule, which is amazing for news traders. So if you're a news trader, an event-based trader, Perdia is by far the best firm to use as a prop firm, hands down, bar none. The reason is, so use Apex, who I love. I literally just got a payout from Apex yesterday. Great company. Problem is, if I make $7,000 in one day with Apex, I literally have to even that out. I have to keep trading for way more days to even it out until 7,000 is less than 30% of the average trading day. It's a pain. It's a different strategy, but Perdia is most similar to a personal account. I'll say that. And that's partially because they're just putting you in live trade funded accounts. I trade my personal account, right? So the way that I typically do news days is I just trade my own account, and I don't even deal with prop firms on news days a lot of the time. I'll be honest with you guys, right? So testing it out with Perdia because they are similar to a personal account in that regard. They just still do have like the max daily loss and things like that, which you have to be aware for. So you can't be totally flippant. If you're used to doing a higher leverage trade and just letting them relax a bit, you can't. You have to be really tight at the beginning of your trade, which is another constraint. It can be frustrating, but once you catch one, you'll be fine. Again, it's the closest. It's not the same. It's closest to having a personal account for these high leverage days. If you want 50% off of a Perdia account, you can use code FORCE50 down below in the description of this video, as well as codes for all the other firms. My Funded Futures, I'm their official YouTuber. Check them out. Definitely subscribe to their channel. Codes for them as well, and Apex as well. Those are all the firms that I currently use and the only ones that I use today. So a lot went down in that video. A little bit of a longer one. Had some fun with this one, guys. But let's recap what we learned. Timing. You only need to be right when you're in the market. So it doesn't matter what you thought at 9:30. It doesn't matter what happened at 10:30. If the first trade that you take is at 2, you just need to be right at 2 o'clock. I know because of your friends and all the stuff that you post and the need to chase internet clout, it's going to be tough. But deal with it. Put your big boy, big girl pants on and focus on being a good trader and not being a popular trader. 2, prop firms, okay? If you want to trade news, Perdia, by far the best news trading firm. You can trade news with other firms. There are rules and stipulations. And some firms you can't trade news with at all. Like flat out, you're not allowed to trade news. News days in general, even if you can't trade the news events, news days should still be a key part of your playbook. Anytime there is a day with news, you should be looking for expanded price action and opportunity in the market. Depending on the event, whether it's CPI at 8:30 a.m., if it's FOMC in the afternoon, okay, it's going to determine what the strategy looks like. You should still be aware of the news as those days in general offer more opportunity or easier opportunity. I think one of the pitfalls that you'll fall into as a trader is we see a news day and we're like, oh, I'm going to make a lot of money today because of the big moves. Well, the market, especially in Q, has 100, 200, 300 point moves every day. The key here is predictability and ease. Okay, can I find a high confluence for a quick sweep where I can make, again, 50 points in an instant and be done? All right, because I can make 50 points on literally any day of the week. The point is that I can just do it very, very quickly because I know there's going to be an impulse and I can react to the impulse, right? I like to react to the impulse, not trade into it. That's my thing. I have a whole other video about it. Check that out. Really, the last thing that I want to offer to all of you guys is a little bit of ray of hope and sunshine. Trading is super duper hard. I know, I've been doing it for a long time. The prop space offers a ton of opportunity for people. I love that that's big now. I still think that you should create your own personal account and practice in your personal account. You can do this. Be smart. Visualize the ideal version of yourself, the successful trader version of yourself. Act like that person. What would that person do? What would their morning process and planning look like, right? What would their trade execution look like, all right? If this person was trading professionally, would they care what somebody said on Twitter? Would it matter what they said on Twitter at 9:30 a.m.? If you're a professional trader, it doesn't matter what you said on Twitter at 9 a.m. What matters is, did you make money today? Did you make money today? That's the most important question as a professional trader. It doesn't matter what people said on Twitter. Because you know what you can do is like, hey guys, here's my thesis from the morning. It was completely wrong. Also, I made $4,000. Here's what I did about it. Be a good trader. Subscribe to my channel and come back later. Peace.